Stock investors are unnerved, overwhelmed by fears and the lack of confidence. Our analysts are ready to share their red-hot analysis and forecasts. Wall Street remains on a roller coaster. The US dollar conquered another multi-year peak on Wednesday, while the US stock market took another nosedive. Tuesday was a volatile day, and yesterday Wall Street indexes negated earlier gains and closed with big losses. The S&P 500 printed a new intraday low over 2022, and the Dow Jones closed in the red for 6 days straight. To be more exact, the Dow Jones slipped 0.12%. The Nasdaq was the only index to close 0.25% up. The S&P 500 sank to 3,623 intraday, the weakest level since November 2020, but rebounded to 3,647 points, closing the day. The benchmark indexes traded in the New York pre-market, reflecting profound pessimism of investors. The S&P 500 is expected to trade in the intraday corridor between 3,570 and 3,690 points. Hawkish remarks from several Fed policymakers are to blame for the slump in the stock indexes. Yesterday, FOMC members Charles Evans, Neil Kashkari and Mary Daly shared their viewpoint that high inflation poses a grave threat to the domestic economy. They confirmed the aggressive Fed's agenda for further rate hikes. As for the economic calendar, a series of macroeconomic data proved that the U.S. housing market is cooling down. House prices eased the pace of growth in July to the largest degree for the history of such surveys. S&P CoreLogic case Schiller reported that the house price index rose by 15.8% in July from July a year ago, and this is lower than the annual 18.1% increase in June. And today the market will be able to judge on the US pending home sales. In the early New York trade, futures on the benchmark indexes dropped and yields over 10-year treasuries topped 4% for the first time in at least 12 years. Futures on the S&P 500 fell 1.18%. Futures on the Nasdaq skidded 1.61%, and futures on the Dow Jones shed 276 points, or 0.95%. The stocks of US high-tech giants such as Apple, Tesla, Microsoft, Amazon and Meta traded mixed in the pre-market. A slump on Wall Street and a rapid climb in the yields of US Treasuries arose fears that inflation in the United States will be hardly stamped in the near time. In response, the Federal Reserve will have to maintain interest rates at high levels for a longer time than expected. All in all, the stock market is badly hurt by recession fears, unbeatable high inflation and the hawkish Federal Reserve, so the market is not able to find some fundamental support to recover. Wall Street is likely to remain on a seesaw for at least 2 weeks ahead because the economic calendar reminds us about crucial reports in the near time. Inflation report, pending non-farm payrolls and a new season of corporate reports. Besides, more Fed speakers are due to make their comments tonight. As for the currency market, the pound sterling has come under spotlight today amid the new British government's agenda for tax cut. The jitters are bearish for the sterling. At the same time, the US dollar is extending its stunning rally. Its index has jumped to a new high at 114.76. Bearing in mind high volatility today, the US dollar index is likely to trade in the intraday corridor between 113.80 and 115.20. Yields of 10-year treasuries surged by 7 basis points and topped 4%, the strongest level since 2008. amid the prospects of high interest rates as well as concern that Japan's government will try to support the alien yen through selling the US debt securities. Rising treasuries yields pushed the US dollar up to a fresh peak in 2 decades. In contrast, the sterling tumbled against the greenback after the International Monetary Fund warned that the UK government's tax cuts might negate the Bank of England's efforts to tame inflation. The euro has been falling against the US dollar for 6 days in a row. By the moment of recording this video, the euro has lost 0.3% to trade at 0.9576 against the greenback. The Canadian dollar cannot resist the firm American rival. The loonie weakened to 1.37 and the lowest level since June 2020, heading for new lows. At the moment of recording this video, the USD CAD pair was trading at 1.3737 within the intraday corridor between 1.3680 and 1.3800. Despite the hawkish remarks from the Bank of Canada's governor, loonie traders have serious doubts. Earlier, Governor Tiff Macklem pointed out that the central bank should raise interest rates to stem inflation. Nevertheless, Canada's lower-than-expected CPI decreased expectations of how aggressively the Bank of Canada would continue rate hikes. Besides, the Canadian dollar is affected by the weakness in the commodity market. Oil prices plunged to the lowest levels in 9 months. Benchmark crude futures are weighed down by the overall pessimism, recession fears, and a waning demand. However, this pressure eased today due to contraction in oil production rates in the US amid the land hurricane. In this context, oil prices rebounded from lows today and gained ground. Brent crude rose 0.9% to trade at $86.90 a barrel. WTI futures added 1.6% to trade at $79.81 a barrel. The crypto market has been gyrating today. Bitcoin tumbled 7% intraday, but trimmed losses later on. The token is hovering at around $19,000 and drifting lower in parallel with the most popular altcoins. The crypto market mirrors the overall pessimism. On Tuesday, Jerome Powell mentioned the crypto industry in his speech. Powell stated that in the ecosystem of decentralized finance, there are serious structural problems due to the lack of transparency. Though such intention from the regulator is far traders' benefit, it could hardly cheer the crypto community. Meanwhile, the regulator is sending signals and has not taken action yet. Hence, digital assets could take advantage of the risk-on mood if a situation arises. Experts say that Bitcoin is still trading in a sync with the Nasdaq. The trading range for the token is defined between $18,200 and $20,000. And we will tell you how the remarks from Fed's policymakers influenced market sentiment. We wish you profitable trades. Make right trading decisions with the InstaForex and see you online tomorrow.